Welcome everyone and Happy New Year. This is not financial advice, and we've got a great segment about the market update. We haven't done a market update in about a month now, and so there's a lot to cover. The first thing, we're going to start with the Bitcoin chart. So Bitcoin has been crazy volatile over the last couple of weeks because everybody's trying to decide whether or not there's going to be a Bitcoin ETF approved this month. There was a report that just came out today that said that less than 50% of financial advisors are expecting an ETF in 2024. So that means that it's not priced in, right? And that's the other expectation is people are like, oh, there's going to be a ETF coming in January. It's already priced in. We need to sell the news, and we've already reached the high. So all of this is going back and forth, causing a lot of volatility. From everything that we're seeing, we're anticipating a Bitcoin ETF approval January 11th. So a week from today, but stay tuned. We will see. If we ignore the news and just look at the charts, we can also get an idea of what's to come. So we're going to zoom in, and this is the weekly chart of Bitcoin. You can see these big wicks to the upside and to the downside. That just means there's been a lot of volatility just this week. But for the most part, we're staying above the trend. We are making higher lows and even higher highs. So all things considered, things still look very strong. But a big reason we've seen volatility is, well, for the last month, markets have pretty much only gone up. And so it seems like this first week of the new year, people have been taking a breather, maybe adjusting their positions. Because if we look at the S&P, look, we had 1, 2, 3, 4, 5, 6, 7, 8, 9 straight weeks where the price went up. So this is our first week that we've gone down. Everybody's panicking. They're like, the top is in. You know, people are considering, because we got really close to all-time highs. They're like, maybe this is a double top, and that was the last bit. I just think that this is a breather. Maybe we go down for a week or two or three, but we still have higher highs to go. The same thing with the Nasdaq, right? It also went up 1, 2, 3, 4, 5, 6, 7, 8, 9 straight weeks. It did reach all-time highs. So that goes to show we're making higher highs, we're making lower or higher lows. And so I don't think there's anything to really be concerned at this point. Now, there's a few other things. We talk about the US dollar index, we talk about interest rates. Let's take a look at those, and maybe that can give us a hint as to why we're seeing this down price action in the markets. When we look at the 10-year yield, let's zoom in here. We had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. Almost 11 straight weeks where the interest rates for the 10-year were going down. This is the first week in a month and almost 2.5 months where interest rates are going back up. So what we can see here is we broke below the 200-day moving average. We're now bumping back up, and the 200-day moving average is acting as a resistance. So this is all very normal. Markets, no matter what they are, do not go down in a straight line. We anticipated this reversal. It should be brief, but that's also putting pressure on the S&P, the Nasdaq, and Bitcoin. The same thing with the 2-year yield and the 30-year. They're all getting these breathers, but they're all below the 200-day moving average. And as a general rule, when the chart is below the 200-day moving average, that is bearish. So none of these bump ups should be considered bullish and a concern for the markets. So let's go back to Bitcoin again, and we'll zoom in to the 1-day. And one thing that's really good to see is this candle that happened on Wednesday, January 3rd, where the price got up to 45,000 and it dropped all the way down to 39,700, right? That's a significant drop. It's like 8%. But because of this wick, it means it jumped all the way back up and closed the day at around 42,800. So that just is a movement that shows that there was a lot of leverage in the market, and that got flushed out. And so what happens is when the price starts to fall, people get liquidated and the price keeps going lower, and eventually there's enough buyers. Because there's enough buyers, it shoots the price back up once all of those leverage positions are liquidated. So this is showing there's still a lot of strength in the market, even though there was a lot of volatility. People were panicking. It's also good to see that people are really quickly convinced that the run is over and that they need to be bearish. This is great signs for continued strength for the price to increase. So, as I mentioned, we're creating higher highs, we're creating higher lows. What I'm expecting is the first level of resistance is 48,000. I wouldn't be surprised by next week when we get this ETF approval for the price to increase to around 50. And then it's a question mark as to what happens from there. Is the top going to be at 50? Is it going to be at 70 or 80? My guess is that we're going to get all-time highs, which is around $70,000. We're going to get a lot of people start saying we're headed to 100,000, and people are going to put the laser eyes again like they did in 2021. And the market's going to top out at around 70 to 80,000 sometime in between now and the end of March. So that's what we're looking for now. The time right now is just to be patient and to wait and see what happens with the ETF. So nothing is giving me pause, even though we've seen a correction in the market this week. There's a lot of exciting things happening, and we'll see you next time.